welcome. This is Bennett Tchaikovsky. We're here today to kind of go through the homework packet for inventory sales and purchases. My disclaimer and copyright notice is that the information and opinions in this presentation are those of myself and do not, basically not my employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. Presentations for educational purposes only and does not constitute any legal or accounting advice whatsoever. This presentation is copyright 2008-2025 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. Note that this presentation will refer to companies and other parties, third parties. I do not claim any copyright that belongs to those third parties. So in terms of going through and looking at this particular homework packet, which is really going to be right over here, is recording inventory purchases as well as sales and the different kind of parts in this. Now, again, as a reminder, the importance of handwriting out everything, especially with this particular chapter, mainly because when we start going through and recording sales transactions, you're going to need to know how to basically do different types of things. So when we go through and look at this particular, going through the questions with solutions, and again, how do you access these? Right over here, just click on this, and this will go through and take you to our questions with solutions. You'll see a lot of different videos over here going through, but probably the most important thing to kind of remember is that when we're going through and dealing with inventory purchases, one of the concepts is also well as inventory sales. One of the very most important concepts is that of free onboard shipping point or FO or free onboard destination, or it's really called FOB shipping, FOB destination. So make sure you understand what those different what the different terminology means, because it's when we're going to be going through and recording a purchase or a sale. Over here, one of the other kind of concepts, which I would only really test in terms of going through for extra credit, is that a lot of times you'll see, well, what happens if we don't take a purchase discount? How much do we go through and lose? Well, the challenge with that is that from a cash flow perspective, you have to remember that when you purchase inventory, you are going to go out of pocket cash. And when you purchase that inventory, you're then going to have to sell it, and it may take time for you to collect that inventory. So just because you see a discount does not mean you should go through and take it. So be very careful when you go through and see those types of questions. Now, when it comes to inventory sales, this is really where we kind of get into a brand new scheme of things. Now, one of the really important things from the first two exams, going through the basic sales, everything was always performing services. And I did this very specifically because if we go through and sell inventory, there are two things happening. We're going to record the sale. This is going to look very, very similar to what we were going through and doing previously, meaning I'm debiting accounts receivable and I'm crediting revenue, right? So when I go through and record the sale, I'm going to be going through debiting accounts receivable, crediting revenue. If this does not look familiar to you, time to go back through and review the first two homework packets. But the second thing that's going through and happening, so when I go through and look at this, right? So record revenue, debiting accounts receivable. If I'm selling something on account, crediting revenue, right? When I sell inventory, right? Just think about this. If I'm Costco, when I walk out of there with a cart, what's going to happen is I'm going to be crediting inventory because the customer is leaving with my goods. I show that decrease to my asset. Inventory is an asset. I show a decrease to that with a credit. But here I've got to record a cost of that inventory. And this is going to be called my cost of goods sold, right? So this is an expense. So the reason why I don't show sales of inventory for either of the first two exams is because if I did, you would be going, oh my God, what's going on? And again, this is why we're going through and layering things, right? Basically, first two exams, services revenue, let's get that down. Let's get the concept of unearned revenue understood. Now we're going through and now we're selling inventory. When we go through and sell inventory, there are two things happening. I'm recording that sale, and then I've got to go through and show the inventory going off the books or leaving the store, right? Which is basically going to be this part right over here, and then going over here and recording the sale. And this is going to be right over here. Okay. Now, the other thing to think about with this particular chapter is when it comes to other types of transactions that impact sales. Revenue or sales revenue, same thing, right? But when it comes to things like sales returns, sales allowances, sales discounts, we don't debit. So if someone returns goods to me, right, we give them credit. No, I would be thinking intuitively, okay, I've got to reverse this entry, right? I got to basically credit AR. I've got to go through and debit inventory, returns, and then I'm going to credit cost of goods sold, because if it's an inventory return, I've got to reverse the curse. But what's very important, once I record revenue, I do not debit revenue. What I'm going to go through and use is something called a contra revenue account, right? Revenues have credit balances. This is going to be called sales returns. So when we study these different questions, as we go through and do this, we're also going to learn about sales allowances, crediting AR. We're also going to be learning about sales discounts, right? So this is going to be sales discounts, cash, and then over here, I'm crediting accounts receivable. This is when the customer goes through and pays me. What's really important to remember is that when we go through and do these sales transactions, these forms of journal entries do not change. They are always going to be the same. So again, as you're going through and learning this, something that is great to kind of go through and memorize. I've put a lot of different questions in here that also over here too. The other sample question basically over here, basically with regards to sales transactions. So thank you for being with me here today. Hopefully you have success with this unit. Remember, there's a lot of resources here for you to use. AI application for financial accounting, the different parts over here in terms when inventory passes, all these questions that are right over here that'll line up with what we have going on. And then this is a shortened video series of just going through different topics, right? So again, as well as basically solutions to the additional practice. The more you practice, the better you'll go through and do. And again, best of luck with going through and learning this chapter. If you have questions, please feel free to reach out to me. That's it. Have a great rest of your day. Please remember to like and subscribe to the channel. Thank you for watching, and I will see you on the next video. Have a great day.